Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Wednesday, last day of May, May 31st, 2017, and this is the Daily Report for Gold and Silver. We have a mixed bag in the precious metals markets with gold, platinum, and palladium trading higher on the day and silver trading slightly lower on the day. We did send out a special trade alert, effectively suggesting to our subscribers that we trail our stops higher. Of course, that will be a focus once we pull up some of our technical studies today. But first to gold pricing. Gold did trade effectively higher today, up about $5.60, closing at $1271.20. That is basis most active futures contract, which is now showing as our August gold contract, the contract we are currently trading in. It traded to a high today of $1276.80. That is important, as well as a low today of $1262, closing up much closer to the high than the low on today's trading cycle. Silver, however, did close lower on the day, closing off by about 11 cents at $17.31 per ounce. That is most active July contract, traded to a low of $17.22 and a high today of $17.42. Of course, that low is important because we also raised our stops on our current silver trade. If you recall from yesterday's show, it was the fact that we did have lower pricing and did not see a follow-through to Friday's substantial breakout, and that's this candle here. This, of course, being a daily candlestick chart. I was a little bit concerned. Now, I talked about the fact that we had to look at a couple of different variables. First variable being this lower resistance line carried forward, and the second variable being our 50-day moving average as a kind of a line in the sand or a price point that we did not want to see gold prices move to. Effectively, we dodged that bullet. We had the market trade higher today, closing up about $6, $1271.70. Of course, this being the second leg of our trade, we pulled $35 or $3,500 per contract profits when we rolled over the other week. Now we're in at 65, I believe, $1271.80. So we've got a little bit back in terms of some profit again. And I did send out a special trade alert yesterday afternoon here so that you would have it for the morning as morning trading started, of course, in the mainland, to effectively move your stop to just below $12.55. And the rationale behind that particular price point of $12.55 is the fact that it is the 50-day moving average in gold. So you should currently be long August gold at 65, markets at 71.80. Your stop should now be below 12.55. And so traders, as far as silver is concerned, as I mentioned yesterday, it is certainly trading in a world of its own. It is not trading in tandem all the time with gold, and I really sense the potential on a technical basis for there to be some resistance right in this area of about, call it 1745, and it's based upon the 50-day moving average in silver. And as you can see, it is the 50-day is below the 200-day moving average, so it's still showing some bearish sentiment. And unless, or until I should say, silver prices break above this price point, even with this extended rally, you can't say that we're in a bullish rally mode. This is still a recovery as we move from these lows. We have some pretty good profits in our current trade. We are in roughly, I believe, 1632, so somewhat in this area here. Effectively, my suggestion yesterday is to move your stops to below 1710. Our low today was 1722, and the reason for that primarily is to guarantee or to lock in profits on our current trade right here. Because my sense is that if in fact we cannot, or excuse me, if in fact silver cannot overcome the resistance in this area before trading lower and then moving back up, I want to be able to yank some profits out of this current trade. As I said, they are trading differently, so we're handling our stops a little bit differently. But nonetheless, what this does is it locks in profit between 32 and 1708, depending on where you put it below 1710. And so it locks in some sizable profit profits really between these two areas here, and that to me is a decent trade in silver. So obviously, maintain your current positions in both gold and silver, maintain your current stops, which should have been trailed higher today. In other markets that we follow, a weaker US dollar provided some strong headwinds for gold to trade higher on the day, actually accounting for the majority of today's rise. When we consider silver trading lower, even those headwinds couldn't stop some profit taking occurring within those markets itself. When we look at the U.S. equities markets, we had fractionally lower Dow Jones Industrial, although it closed well off the lows, closing down 20 points at 21,008. Over to the Standard & Poor's, also closing fractionally lower to almost unchanged on the day at 2411. And then lastly, the NASDAQ Composite closing fractionally unchanged today at 6198. So as far as the dollar is concerned, it did provide some tailwinds for gold, platinum, and palladium pricing, which moved to higher ground today. Of course, silver was down 11 cents, and that's down in light of the weaker U.S. dollar. If you recall from yesterday's show, we talked about the fact that, especially in the dollar, we had identified a very bearish signal, which is basically called a dead cross. A dead cross is when the longer, in this case, the 200-day moving average, crosses above the shorter 50-day moving average, and it is obviously the opposite of a golden cross, in which you have the polar opposite happening. We have lower pricing today, off about 0.3%. We had lower pricing yesterday, and as I've said over I believe the last couple of weeks, I do see some underlying weakness in the dollar, and I do expect that to continue. In terms of straight levels of support, I draw your attention to this area right at around 96 on the dollar index. We're at 96.92, so it is about a full percentage point away from there. We can see on a historical basis that this has been an area of resistance. It has also been a breakout point as the market broke above that particular price point. On an extreme day, we also saw that as an area where some short covering took place, or buying really came into the market based upon this dip. So looking at the dollar index as we are, I do believe we will continue to see lower pricing, and my target right now is about 96 on the dollar index. As I said in our opening letter today, given the events and fundamental data that's out there that could in fact have dampened the recent price rise in gold and silver, except for today, we have seen the majority of these events pretty much get factored into the market with a small effect. The high probability of a June rate hike is still on the table. The Beige book today supported that we would see a rate hike in June. However, we've not seen any kind of real strong downside activity in terms of pricing, even given that news. On a technical basis right now, we've talked about why we put our stops where we did, but our upside target right now in gold remains 1297. The high today came close to, but not flirting with those numbers, but I believe that we could, in the next couple of weeks, actually go and challenge the current yearly high and possibly even take it out. This has been Gary Wagner. Wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.